All right, well, good afternoon, everyone. Happy Friday to you, and welcome to our Friday series of webinars. Today, we're going to be talking about Life Insurance 101. My name is Bernard Jean, and brokerage sales advisor here with Insurance Advisors Direct. So without further ado here, let's get this started. All right, so first off, Insurance Advisors Direct is a full service FMO. We kind of pride ourselves on our 7 pillars of success. And that's what we provide to you, the agents. One is our product offering, marketing services, lead generation, technology, sales tools, training and education, and administrative services. One of the big things for me is our training and education, and that's why we committed to doing our Friday webinar series. Now, sometimes those Friday webinar series will be on a Wednesday or Thursday, another day during the week, as well as on Fridays. We have just so much to talk about, and want you guys to get as much training and education as possible. So here, let's get this started. Webinar is going to be kind of short here. So if you have any questions, just type those questions in and I'll answer those at the end of our presentation. And then as always, this webinar will be posted on our YouTube channel. All right. So folks, what is life insurance? And this is just an outline of what we're going to be talking about today. I'm going to go over what is life insurance, components of a life insurance policy, different kinds of life insurance and how they work, top 10 reasons why people buy life insurance, and then 10 reasons why you should be selling life insurance, then how to handle objections in 6 easy steps, just a few life insurance statistics, and a couple of life insurance tools that we use that we think will be beneficial or some value to you when you're on those appointments with your clients. All right, so what is life insurance? Life insurance is a policy. A life insurance policy is an agreement. Actually, it's a contract, and we all know what a contract is between an insurance company and a person or legal entity. Could be a trust or a business. The insurance company will pay a death benefit to the insurer's beneficiary as long as the insured or owner of the policy pay premiums associated with that policy. And pretty much, like I said, it's a contract. Now, what are the components of a life insurance policy? When you have the insurer, and the insurer will be someone, excuse me, like John Hancock or Mutual of Omaha. Then there's the policy holder, and that's the owner, and right up under it is the insurer. So it could be one and the same. The other component is the death benefit. And that's 2 key things is the death benefit, which tells you how much will be available to your beneficiaries, the folks that will be receiving that death benefit if you unfortunately pass away. The other component is the length of the policy. And then we'll, next couple of slides, we'll talk about 2 different types of policies. So with term, it could be 10, 15, 20, 25, 30 years for the policy length. And then for permanent, it's exactly what it is. For as long as you pay those premiums, you'll have that policy. Then the premium is the second component, how much you're going to pay per month or semi-annually, annually, pay it up to age 65. You could pay it for a 10-year period, 15-year period, 20 period, whatever situation best fits you. And then with permanent policies, the last component to that is the cash value. Now with permanent policies, whole life, universal life, index universal life, those are permanent policies that will grow a cash value. So folks, those are the components of a life insurance policy. Now, what are the different kinds of life insurance? There are 2 kinds of life insurance. One is term insurance, and just name because it is for a specific period of time. And like I said in the previous slide, it could be for 10 years, 15, 20, 25, or 30 years for the term of that policy. And then there's permanent, and permanent means that it's a permanent policy. You're going to have that for life, or as long as you make those premiums, or until unfortunately you pass away. So what are the different kinds of insurance and how do those policies work? So one, we have term life insurance. And let me say term, as discussed, is level for a period of time, or and then it may increase every year after that period of time. Does it grow cash value? No. Is it the death benefit guaranteed? Absolutely. And it is the most affordable and does provide the best value out of all the other insurance terms. I mean, the note with term insurance, let's just say you're a young family just starting out and you know your family needs some life insurance. Sure, term is the best route to go, but you know you're going to want to need a permanent policy later on in your life, because as your income growing, your needs are going to change. So sure, with the term, you can convert a portion or all of that term into a permanent policy. Excuse me. Then next is whole life insurance, which is permanent policy. That's level for the life of the policy. It builds a base on premiums paid in, and then those can be used for paid up additions. Can this be used as an investment vehicle? Excuse me. Well, technically, I know here it says unless it's a variable policy, but technically no, but it can be used as a retirement vehicle using the cash value. If you have questions on those, feel free to give me a call and we can go over certain scenarios or solutions that would work in. Is the death benefit guaranteed? Absolutely. So whole life is best for estate planning, for whether individuals or older members of the population. Then there's a final expense. Now, final expense is a whole life policy. It's also and it is termed simplified issue. So it's a level for the life of the policy. It builds premium, it builds a cash value based on premiums paid in. Note cannot be used as an investment vehicle, and guaranteed death benefit, absolutely. Now, what final expense does, it provides lower amounts of death benefits to offset medical and funeral expenses. So it's pretty much a simplified issue, meaning that there's relatively few health questions that you'll have to answer to get this policy. I will always tell folks, and even when I sell final expense policy myself, not looking to insure folks with 20, 30, $40,000. Simply covered for them for the cost of the funeral, usually between 12 and 15,000 in benefits. Now, the next permanent policy is the universal life. Now, universal life for the premiums are flexible based on the needs of the customer. So there's a threshold, there's a minimum amount that the insured can pay, but there's also a maximum amount that was not necessarily maximum amount, but there is an amount that they can pay to help keep the policy guaranteed. There's a cash value. Yes, there's a cash value. It can be used to pay the premiums, but like I said, that's not advised. Now, the one thing with universal life is that it's subject to inflation. Inflation will eat up a lot of that death benefit, but then that's where their guaranteed riders or built-in guaranteed mechanisms, so that policy will always stay active and that death benefit will be guaranteed. Notes can become underfunded and might need additional cash deposits. But that's where if you choose a guaranteed universal life policy, you won't have that problem, even though if it's underfunded, there's guarantees in there to guarantee the death benefit. Because like I said, the universal life is at the mercy of inflation. And there's the index universal life, which is also a permanent policy. Uh, the premiums are level for the life of the policy. Does cash value? Yes, through subs account that are attached to market indexes. Um, and what we mean by that is not necessarily um, uh, just like a fixed index annuity. I mean, the sub account is just a crediting strategy that will be used, and um, growth will be based on the performance of a market index, such as Standard and Poor's or the Dow Jones Industrial Average or NASDAQ, one of those indices. Um, Investment vehicle attached? No, but the sub account can be attached to the market index or a crediting strategy. You don't, maybe I should have put that in there, not sub account, but a crediting strategy, which will be tied to or linked to the market index. Guaranteed death benefit? Yes. Um, with the index universal life, it does earn larger returns to build cash values and to cushion a fall in a market downturn. Now, these plans, index universal life, is actually very good for, can be used for retirement planning, and actually a pretty good mechanism to use as or a supplement to maybe a 401k or 403b or even IRA. So it's a good supplement to have to earn for retirement. And then there's a variable insurance that's level for the life of the policy. Now this grows through the sub accounts from insurance companies and investment pools. So sort of like mutual funds or funds to say that would be in your 401k. Investment vehicle attached, yes. And that's what the sub accounts are. Guaranteed death benefit, yes. And the variable annuity is those wishing for long-term returns and willing to take on more risk, because you are at the mercy of the market. So, and also with the variable life, you're going to have a FINRA or registration, your Series 663 registration in order to offer variable annuities. All right, so here's the fun part. So 10 reasons why people should buy life insurance. One, of course, is to replace lost income. So when one insured family, and let's just say one of the spouse, the husband passes away, they'll have the beneficiaries will have that income from the life insurance to hopefully replace some of that lost income. Then it's to cover burial expenses. Life insurance, be it term, whole life, universal life, whatever the case may be, of course, it's going to be used to cover burial expenses. Now, what I like to do and what I have on myself, of course, I have term insurance, I have an index universal life policy, but I also have a final expense policy. And that final expense is no more than $12,000. And pretty much like if my family can't bury me with $10,000, then, it might be an issue. But I specifically have that final expense policy for my burial needs. And then my other policies, my term and my index universal life will go to my family and whatever other expenses that I may have, want to pay off any debt. And also be used for college planning. You take out a term policy to cover, and if you happen to pass away while your kids are, or before your kids go to college, you'll have that. But then also using an index universal life, you can use that as a college planning to grow money for your kids when they turn 18 to use for college. And of course, the policies build cash value. Folks like that cash value. You can take a loan or withdraw from your cash value tax-free. Well, I'll say quote unquote tax-free. With that, I mean, there's always things that can make something a taxable event, but that policies do build cash value, and you can take those monies out when needed. Then business planning. So, every business, especially you have a partner, should have some type of business succession planning. And then that's where life insurance comes in. So the business will take out policies on, let's say, two co-owners. If one passes away, then you'll have enough to help run the business until you can bring someone else on. And then for estate taxes can be used to pay those estate taxes. Comfortable coverage is affordable. Term insurance is very affordable. You get it as young as possible. And of course, life insurance is based on your sex, male or female, health, and those things right there. Sex, your sex, your health, and the amount of the death benefit. And then it brings a peace of mind. So you know that you covered, if anything happens, you'll have that peace of mind. And then with that peace of mind, a part of that is the love and protection that you have for your family. All right, so what are the reasons why you should sell life insurance? One is high commissions are available to you if you sell a life policy. And that is, we look at final expense policies, commissions on a final expense could be anywhere from 110% to 130%. Now, there is job security in the insurance industry. And unfortunately, if we look at the COVID for the last year, and we don't want to bring any successes over such a tragedy as COVID, but more people have realized that they need insurance, and insurance agents have been turning out a lot of policies because folks are needed. So it's something that we all need. Earn income based on residuals. Of course, you're going to get residuals on policies. It depends, how you set up the payment structure, but yep, you'll receive income residuals on those policies that you sell. Now, with us, like I say, we're an FMO. You can represent multiple carriers as an independent agent. Now, let's just say North American may not fit the needs of your client, but Mutual Omaha's policy may fit. So you have a multitude of carriers to choose from to help those clients that you have with their specific needs. And like I say, more people than ever are buying life insurance. Like I say, unfortunately, COVID has brought that mindset in. Someone is selling it to your client. Now, here's my biggest thing. We shouldn't leave money on the table. I know a good portion of our is with Medicare agents, but those clients that you have require life insurance or annuities or whatever the case may be. I would rather for you all to offer to your clients. And it's just a simple question. Do you have this in place? Do you have that in place? Other than someone else coming in and offering it to your clients. And that goes back, it's an easy cross-sell product with other lines of insurance. So like I said, you have those Medicare clients, and then you may have to wait till after AEP, but, give them a call, see how things are going, and then ask them, do you have life insurance? Do you have anything in place in case you pass away? Will your spouse or your children have something to bury you in? Or it could be something, do you have a CD whose interest rates is probably what 0.35%, and with an annuity, just a straightforward multi-year guarantee annuity, interest rates could be 2.5%. So those are just have to ask the question, and in some cases, very likely to no underwriting. And that goes with final expense policies, just a few health questions. And then even with your term and permanent policies like your whole life or universal lives, if a person is healthy enough, they may not have to go through the underwriting. So, which is pretty big. And then low cost life insurance solutions. Now, there's, of course, there's going to be a cost too, but like term insurance is the most affordable. If you can't afford a permanent policy now, sure, term life insurance is the best route to go. And then later on, as I said before in a couple other slides, is that you can convert a portion or all of that life insurance, that term insurance, into a permanent policy, and generally with no underwriting requirements. It'll just be based on current age. So if you're 25 now, very healthy, and let's say when you turn 45 and you want to convert a portion of that policy, you won't have to worry about any health underwriting. I mean, you could have diabetes, or you could have gained some weight since then that throws you out of the threshold, but it wouldn't matter. You'll get it at your current age without any health questions. And then it's a great referral product, or as I like to call it, a recommendation product. Your friends, you've good service to your clients, and you sell them on the needs that they have. And, 9 times out of 10, they're going to refer you to someone that can assist you. All right, so just a few statistics on life insurance. 65% of Americans say they need life insurance. 40% say they would have trouble covering expenses following the death of a spouse. Now, 7 out of 10 families are dependent on 2 incomes. And then that goes back to 40% say they would have trouble covering. So the families need that life insurance. So 3 out of 10 households are uninsured. So roughly 35 million families do not have the coverage they need. So be it uninsured or underinsured. 93% of Americans believe that life insurance is a necessity. And folks, it is a necessity. And I don't know about you, but I've had way too many family members over the past year pass away due to complications from COVID. And those life insurance policies were needed. All right, folks. All right. So, and how do you handle objections? And here's in 6 easy steps. And these can be used with any lines of product, whether it's Medicare, life insurance, annuities, critical illness policies, income replacement policies. These objections will actually come in handy. So one is listen to the objection. Actively listen to what they're objecting to. Say the objection back to the client. Explore the reasoning for the objection. You'll find out, why are they objecting to something that they may need. I mean, you don't want to overtalk them, and you don't want to I want to say degrade them or make it seem like, you're pushing it, but just find out what's the reason behind, or why are they objecting to this? And then answer that objection. Then you go and you confirm that you answered the objection fully. So if they receive the answer, they understand what you're saying, fine. If not, find out again. Maybe you might want to restate that objection to them and restate the answer that you gave. And maybe you just need a little clarification. And then redirect the conversation back. You want them to sell the policy themselves. You're just there as the mediator. You're presenting the information to them. You're going to answer those objections, and then redirect the conversation back to the policy, and then ask for the sale. Now, here's a few things that you can take with you, or actually you can do it virtually, because everyone's going to receive a copy of these two tools. How much life insurance do I need? You can fill that out. Just have your calculator handy, fill it out, and you can tell them right on the spot, this is how much life insurance that you may need. But as always, remember, it's what's affordable for the client. They may say that they need $1 million worth of life insurance, but the reality is they probably, some folks can only afford 150,000. So we get what we can. Then there's the life insurance request form, and fill that information out with your clients. And then you can actually fax that back to me or email it to me, however you want to get it to me. And I'll be glad to run those illustrations for you. But you gather as much information as you can, and that will help us, or even help you figure out what type of policy and how much they will need. So like I said, folks, everyone on this call will be getting these two forms to help them out. And then the forms, that they are customizable. We can have your logo put on here, or even change the color, however you want it. We can definitely do that for you as well. So folks, that is all I have on Insurance 101. Like I said, this is going to be a pretty short webinar. I'm going to get straight to the point. I mean, there is we can go on days talking about different life insurance solutions, but we just wanted you to get the basics and let you know that IAD is here to help you with that. So if you have any questions, please let me know. Just type those questions in. I'd be glad to answer them, or shoot you an email, or call me anytime. Number is here, 248-946-4640, extension 112. Of course, is my email address. And then also, call me on my cell. No problem there, 313-492-8005, and I'll be glad to answer any questions that you have, or even get you started contracted with a few of our carriers. So folks, again, thank you for joining us on our Friday webinar series, and I hope you will have a great weekend. And I'm going to say, I don't see any questions here. So if anything pops up, like I said, give me a call or shoot me an email and get that information to you. All right, again, folks, have a great weekend and take care. Bye.